Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A bearish black crow yesterday, you could say the fifth one in a row, but as the prior four were all indecisive spinning tops, I think the point is moot. Admittedly, the one before yesterday was also technically a key reversal down, but as I said before, I think the point is moot. Anyway, the key feature of yesterday was the close, below both the flatlining medium moving average, currently at 94.51, and the slowly rising short medium moving average, currently 94.70. Even with this close below, we can still see that the market's having a hard time deciding if the recent move lower should continue or not. A factor that has grown in significance and which halted the decline yesterday and the day before is the next dynamic support, and that's the slowly rising long moving average, currently at 93.53, as it slowly rises into the market's space. Now, up until yesterday, the action has seemingly been centered around the April 2020 to date optimized uptrend, currently at 95.79. Well, that is now resistance above, and we must now look to the long moving average below as being the key factor. So far today, a higher open, right in between the medium and short medium moving averages. We've since tried higher but have been capped by the optimized uptrend and once again supported by the slowly rising long moving average. Wonder how long this is going to last. LME 3-month aluminium. A significant bearish long black Mariposa yesterday. It is a continuation of the action we've seen these past 3 weeks, and individually yesterday not only punched down and closed below the previously highlighted, breached but unbroken mid-February today uptrend, currently 26.80, but also down through the August 2011 high at 26.66 and the important 50% Fibonacci line for 2021 at 25.86. Prices finally halted at the old upper trendline extension, currently at 26.36 of the May to August ascending triangle. I've recently highlighted a feature here as a potential big pattern mover. It is the breached but unbroken until yesterday mid-February to date uptrend. As I've previously explained, I have been a little unsure as to whether this market has really formed such a large pattern. But the sureness that has grown a lot over yesterday, or especially after yesterday, and is to regard the action since June as a bump and run reversal top. Now, why the mid-February to date uptrend? Because this uptrend would be ideal as the trend line for such a bump and reversal top. I know it is early on, but I feel obliged after recent weeks' actions to give you some ideas on the downside for this pattern. So, an initial target X for such a pattern would be in the 23.53 area. Now, there will be obstacles on the way, most notably the next dynamic support below, which is the rising long moving average, currently at 24.92. But I can only say what I see here. Additionally, I've discussed the idea here of the middle of last week until the middle of this week may be part of a bearish halfway hesitation stroke bear flag type move. In this case, the target X1 is a little closer in the 24.50 area. I am sure there are other patterns in here, but these are the ones I can see right now. So far today, a slightly higher open and a try-up and subsequent rejection of the 61.8% lesser Fibonacci level at 25.77. Before another significant move lower. This time we've dropped down through the upper trendline extension of the old May to August extending triangle and moved down towards that super key long moving average, currently at 24.92. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.